Welcome to this episode number 54 of your next trade code today, S&P 5000. So the rally in stocks in the US and in Europe and in Japan, not in China, keeps on going. Now the S&P closed yesterday above 5,000. And as we're going to see, this big rally keeps on moving. Maybe we're going to be finding some new drivers, but let's start with what has been happening for the year to date. So now we are at 5.4% for the S&P, 6.5% for the Nasdaq. So we are gaining roughly 1% every single week. Japan up 10%. So pretty strong market. You need to keep in mind that most of the non-USD currencies have been weakening. So FX adjusted, that means Japanese market is not as big as 10%, but still very, very strong market for the developed markets. Interestingly, this week it has been really about risk on. Still the same story. Double digit for crypto with Bitcoin up 12%, 10% for Ethereum. If we look now at WTI, that is kind of the reversal of the weakness that we've seen the week before. Copper down 5%. So what about the week to date? So week to date, 1.4% for the S&P, because why not? 2.3% for the Nasdaq, 2.4% for the Russell. Europe strong as well, Japan strong as well. So really anything that is stocks have been enjoying and keep on going higher. Currencies kind of flattish versus the US dollar, so we have been trading sideways. There has been some intraday volatility, but not real direction. As I said, Bitcoin, Ethereum, very, very strong. Gold, bit of a noise between 2020 and 2040. So more than a bit of a noise. So we are trying to find some direction, not much clear direction. So what about the year-to-date industry's performance? As we've been saying, S&P is here. You have very few sectors, industry that have been outperforming the S&P year to date. Why? Because this market is enjoying a very bad breath where very few names are driven the market. So left-hand side, we got the solar. We have a better week for the solar, as we're going to see later, because we got some decent earnings from solar players where the industry enjoyed a decent move. So I'm interested into this week to date. So here you get the solar, as you can see, almost 8% for the week, but the winners are still the same: semiconductors, clouds, cybersecurity, software. So the winners keep on winning. No change in that. We have more and more concentration in very few names. So several reasons for that. One of the reasons is obviously the option market, where very few names are enjoying many calls buyers, and that pushed those names higher. And as well, due to passive investment. So if you've been following the market for more than 2 months, you do know that passive investment is getting bigger and bigger in driving the market. And with passive investment, that means more and more people are putting their money in the same names, or the weightings are going for those 30, 50, 60% of their names. So passive investment plus calls are driven those names and those sectors higher. So what about the week-to-date sectors performance here? Technology 2.8%, so no end in sight for the time being, very, very strong. Utilities minus 2%. Why? Because as we're going to see now, rates have been a bit up for the week, so 0.15%, so 15 bips for the week for the US 10 years. As we have been saying for a few weeks now, the trading range for the US 10 years has been between 3.8 and 4.2%. So we are getting closer to the top end of the range. The reason is the following. We had the ISM manufacturing a week before. The ISM services were, as leading indicators, they were telling us that inflation was coming back again. And as well, more importantly, for the week coming, we're going to have the US CPI that everyone is waiting for. So looking at the US rate through the Fed funds expectations, the Fed fund rates, as you can see, from 1 week to another, not much of a change. When should we be expecting the first cut from the Fed? Sorry, we should expect that to happen in May of this year, and we went from March to May now, where the market is more and more thinking or pricing the fact that the Fed will be cutting by 25 bips. What about the VIX? So interestingly, the VIX, as we mentioned, there were tons of calls that were bought for February and March. We're going to have the VIX expiry this Wednesday. And as volatility is not pushing higher, they are kind of dying by themselves. So this is why we have seen over the whole week the VIX, the volatility, the implied volatility getting smashed every single day. And maybe, we should expect something to be happening after the expiry, after the CPI. When is the expiry? That is on the open of Wednesday, this Wednesday. So in between, we are now at almost the recent lows from the implied volatility at 12.7%. So what about the technical analysis? So this is the range that, or the trading, move that we have been talking for weeks and weeks. So now we are at the open range, at the top of this range. That's roughly 50.43 on the S&P futures. Again, that is a bit of dodgy technical analysis, so don't put like everything into your portfolio into that. What I'm interested is you see this is a weekly chart. Over the last 15 weeks, we had 14 green weeks, so that means for 14 times the market was up. So that is quite of something that we have not experienced. I think I read somewhere that 1975, so I was not even born. So that tells you all that story is. So we are at the top of at least what I have here. I'm waiting for a catalyst to go reversal. As long as you don't have a reversal, you are in a one-way traffic. That is the same for the Nasdaq. You see, we are making new highs, coming back into the S&P. So I won't go for the time being, shorted the futures. What I've been doing is a bit of a put spread. I've been doing it before, 3% below. I've been doing a bit on Friday. So that's kind of, to me, a cheap way of a potential reversal. And as well with the volatility, implied volatility at 12.5%, I think the risk reward is pretty good. What about the Russell? Russell, we are going back into interesting level 2020, roughly. Facebook, Amazon of this world versus the overall market, as you can see, we keep on making new highs. So the winners keep on winning. We don't have the fabulous 7, we have the fabulous 4 now that are driving this market. What we are expecting is what nvda will be doing in 10 days time. Now it's trading at 720, close at 720 roughly. What about CL1, which is for WTI, again trading sideways, a bit more volatility. So as you see, the trading range on a weekly basis are getting larger. So we are means that there is more volatility in the underlying, and we should expect a bigger move soon. What about copper? What about what we're gonna have over the next few days? It's we got the New Year in China, so Happy New Year for those of you who are watching us in China. And it's going to tell us, how China is going to be doing in the next few weeks and how the traffic has been over the new year. Gold, as I said, 2020 to 2040, that has been the trending range. A lot of noise, many retail traders, looking at it. To be honest, there are many more opportunities than only looking at gold recently. Euro dollar 108, same, same of a range. I'm interested into this one, which is the Philadelphia Semiconductors. We have been making new highs driven by the same name. So look at those names. Those are really what the market is looking at. Let's now jump back into the Excel spreadsheet, looking at what happened for the week. So first, looking at the S&P. This is for the S&P. We had this funny week that started on Wednesday after a trading range of few days in very low volume. Then you jump higher, you move, and you jump higher. So the market has been doing that over and over. You consolidate, you move, you consolidate, you move, you consolidate, you move. And so far, no changes. From the ISM services, as I said, the numbers, the headline number was better than expected, both in Europe and in the US, with higher inflation. On the earnings side, so I'm interested into two stories. The first story is ARM. So we got the earnings on Thursday before the open, or actually that was on Wednesday after close. And they changed a bit the numbers, they improved a bit the numbers, saying, the sales will be a bit higher, that EPS will be a bit higher. And guess what? The stock on Thursday went up even like 50% intraday. So it closed, it went from 77 to roughly 115 on the close. So huge move. And that tells you a lot what is this market. So what is ARM? ARM is a chip maker that is 90% owned by SoftBank. If you read the story about SoftBank 4 years ago, you do know that they were very active in call options. You do know as well that as the float is really, really small, we are talking 10% of the stocks. It's very, of the market capitalization, should I say, it's very easy for the stock to move. What did we have on Thursday? We got 100 million shares, which represents 100% of these flows, of this float. Why? Because you have 1 billion shares, 10% of it make 100 million. So all the shares that were available were trading on the day. So what you should be doing, have a look at the options that traded on that day, the call options that traded on that day on that name, and you'll be very surprised. So if you want to put a position on that name, I strongly advise you to wait and to look at options around the 12th of March. Why? Because the lockup period is ending, and guess what? You can be sure that SoftBank is going to be putting new paper on the market, so going into the secondary market. When we look at an IPO, so here this is the IPO, just to give you quickly an idea, you do as a shareholder most of the time have a 6 months lockup period where you're not allowed to be selling some of your shares. So 6 months plus September 15, that means roughly mid-March, and this is when we get on the 12th of March lockup period. So look at trades. I think there are some interesting trades to build around this period, looking at the options expiry. Finally, going back into the earnings. So this is interesting. This is from FactSet. So far we are roughly 2/3 of the companies of the S&P 500 companies that release their numbers. Out of them, 75 have reported actual EPS above estimates, which is below the 5 years, just above the 74%. So roughly what we have is companies in terms of EPS, in terms of beat, that have been roughly like the average. In the meantime, they have been beating the expectation by 3.8%, which is below the 5 years and below the 10 years. So overall, if you put aside the big tech, which have been beating the numbers quite a lot, overall the companies have been doing as average. And in the meantime, the market is up a lot. And that's the same with revenues, 65% versus 68 and 64, 1.2% beat, which is below the average. So overall, not a crazy earnings season, like an average earnings season, but some names, very few names, have been beaten the market and are moving the EPS year on year versus 2013. So what about the catalyst going forward? The biggest one is obviously the CPI. So CPI on Tuesday, this is the big one. You see here the CPI move that we have for the S&P more recently. We got some 1.9%, 0.5%, but overall before that, it was pretty muted, but on the way up. Expectation for the CPI for this one is plus 0.3 months on months and plus 3.7% year on year. We do know that overall the revised CPI that came out this Friday were more or less the same as the expectation, but still the market is still looking big into inflation. We get the retail sales on Thursday and the PPI on Friday, and some housing numbers overall. We still have earnings, 37 issues, 4.2% of the S&P, but really the big one is nvda in 10 days, which is one of the biggest catalysts. Some Fed speakers, as I said, VIX expiry on Wednesday, so just before the close, and OPEC expiry, option expiry this Friday. Overall, what is the market expecting? Market is expecting 1.3% move for the S&P for this week, which is roughly what we had at 1.2 for the week that just finished now. Finally, as this market is very much driven by options, what I strongly advise you to do is on any day, any week, any OPEX, look at how they call open interest and put open interest. So here, this is for this Friday, these OPEX, open interest on the SPY. We get the SPY that closed here, roughly, and that tells you that for the time being, you don't have much puts, you have mostly calls, and that tells you for the time being, the market is driven higher every single day because the market makers have to chase it through the gamma squeeze. So that could change if we get a bad CPI, obviously, because, market is more and more driven by these 0-day to expiry options. And, if we get a bad CPI, it could flip. But for the time being, this is a slow squeeze where we gain 1%. So actually 1% every single week is not that bad. That gives you 52% for the year, as we saw before, 14 weeks up versus the last 15. That's just a crazy number. It's an endless market driven by options, driven by passive investment. And for the time being, this is a train that is moving and moving. So this is it for me for this week. If you like what you see, put a comment, put a like, subscribe to the channel, join us on the Discord community. We are more and more active traders, so that's something that it's growing, and that's a nice thing to do. So have a good trading week with CPI, which is the biggest number for the week. Have a good week. Bye-bye.